Hello and welcome to the Law of Money. Joining me today is Surya Bhatia, well-known certified financial planner, and we are going to talk about, well, money. We hear a lot about SIPs these days, SIP,
that's in vogue,
as they got called, right?
Yeah.
And but there is a lot of confusion around it. There are a lot of people who say, I have an SIP, but I don't have a mutual fund.
Yeah.
So it's become a brand in itself. It's almost become like an asset class or an instrument in its own right. I want you to explain what is an SIP and how does it work?
See, before I do that, what you rightly said, we need to first understand that what are asset classes and how do I really go to in achieving and maintaining those asset classes in my investment book. Mutual fund is one of the very, very strong ways how you can create a book of investments in your total portfolio. And in the current times and age, I think mutual fund offers you one of the best asset classes within when you enter a mutual fund, because that's only a strategy how you can enter and buy various products within the complete domain. It could be equity, it could be debt, it could be gold, it could be real estate once the REITs come into picture. So you have all multi-asset classes, including gold for that matter. So you have all asset classes under one umbrella. And the tax efficiency being offered by a mutual fund is actually one of the best in the country right now. For example, equities held for more than 1 year from date of purchase is tax-free. I think India is one of the very few countries which offers you tax-free status on investment which is inflation adjusted. You don't get it in any other country or in most countries. So within mutual funds, there is one strategy, now coming to your query, which is SIP. How do I invest in a mutual fund? SIP is the way if I want to create wealth over long term. As the name says, systematic investment plan. That's what it is called as in the form of SIP, which as the name says itself, I invest systematically into a particular plan to create my longevity of my investments, which also answers that if I'm doing a regular investment systematically in investments, I have to do those investments for a longer period of time. Because a lot of times you get these queries, okay, I'm doing my SIP, maybe I can do a 6 months or a 12 month. That's not the way. Period should not be mentioned, if you ask me. Because now, if the period is not mentioned, it's by default assumed as 2099, which means carry your SIP book for eternity, for infinity. It's as simple as that. And whenever you want to stop it, I think many people will have this query, then how do I stop it if I don't have money? You give a stop instruction. It takes 30 days for any SIP to stop. The next query which comes, which follows this is that, then what happens to my existing corpus sitting over there? Now that corpus will continue to earn you had it been a regular SIP. So existing corpus has got nothing to do with the ensuing corpus you will have when the SIPs are continuing. It's not like a pre-committed plan. While you have said yes when you started the SIPs, but the moment you stop, your money existing sitting in that particular investment continues to earn the similar growth, irrespective whether you continue or not. So in my words, in my belief, SIP I think is one of the very good ways. And as you mentioned, SIPs have grown too big in the understanding perspective that people have missed out the real core impact of it. SIPs everyone understand, but as you mentioned, then what is a mutual fund? So I need to understand a little better. At the same time, I think I like to mention that we have said this many times earlier also, while we are on SIP, is that SIPs don't assume cannot give you bad, low or negative returns. It's only a strategy. And in all probability, if you hold it for long term, it should not go wrong. But it doesn't mean that it cannot go wrong. Probability is very low, provided you hold for long term, but you are investing in an asset class which is inherently volatile if you're doing an equity asset class. So hence, all asset classes within that domain will carry that risk. So please be wary about that. Don't think I'll put all my money through SIPs in equity, assuming it's a safe asset class. It is not.